I used to wait to run my dishwasher till it was super full. Now, I run it daily.
Weekdays.
Weekends?
You might think that's wasteful,
But it's not.
even half loads use 80% less water than hand washing, saving $130 on utilities. Cascade, dare to dish differently.
Started off with a bit, now I got coin. I see where y'all going. Been poppin' since Web 1. Hella hoes on Web 2. I was living a dream. Now I'm on Web 3. And it is what it seems. Topping the pyramid schemes, I'm telling you. I'll sell you a percentage on Nebula. Shout out to Vince, he'll set it up.
Surfing on the web and I'm shooting at 3. I've been goated when I got my G. I'm an alien boy from a different planet, yeah. So I got my drink, I'm riding in the 1920s Model T Ford. Call her era lord. Call me Levi, playing on the keys, boy. And I'm about to put my gloves on. If I said it, then I meant that. Yeah, I like that one, I'm about to get that. Crash that whip for the drumsticks.
What up, everybody? Welcome to episode 5 of Web3 Weekly Alpha. It's your host, Serpunk, and we are here to bring you all the news in the last week for the digital renaissance. We're talking NFTs, we're talking bank failures, we're talking breaking down charts. There's a ton to cover, and I want to make sure we get through it all and that we do this in a timely manner. So let's jump right in to the first segment that we always start the week off with, the charts and the market information. All right. So we always like to start off with some crypto, just Bitcoin and Ethereum on the weeklies, just to kind of gauge where the short-term and medium-term trends are at. And as you can see, we did kind of reject this resistance area here. And we also have the two most important weekly moving averages here, the 50 and the 200. We just couldn't get through, and now we're kind of pulling back here, which, you know, kind of expected. We talked a little bit about it. It kind of looked like it was trying to break out for a little bit here. And then once that kind of got weak, we weren't really expecting too much. It kind of looks like it's trying to form that inverse head and shoulders where you have that left shoulder, the head, and then maybe that right forming, hopefully. It's trying to stay on the bullish side. And Ethereum is looking sort of similar, right? Kind of rejected here off that 50-week moving average and this massive resistance. And just kind of pulling back. It's in this broadening range here, and in between then we're kind of just in the chop and limbo there. So we did have some pretty weak action on Friday across all markets due to this Silicon Valley Bank failure, one of the largest bank failures in history. So we're going to jump into that, but that's kind of where we're at now, a little bit more short-term bearish for now. All right, NFTs are looking quite similar, if not worse. This is the Bored Ape Yacht Club, where, last couple of weeks we talked about how, we had that whole dumpage of the Bored Apes. Demand kind of came in and saved it, but it looks like weakness is still sort of setting in here. But again, we're just kind of sideways on Bored Apes. The other ones are not looking as neutral. As you can see here with the Mutant Apes, so these are the two leaders. We always like to start off with Bored Apes and Mutant Apes because if they're not doing well, most likely 9 times out of 10, the whole market is not. So you can see mutants are actually breaking a key support area here where you can go all the way back to these levels. And they've always, it's kind of served as a little critical mark, as you can see here. It kind of broke out once it got through there, and now it's starting to break it down on the downside. And you kind of have like this weird action, this propping up, bear flag, comes down, propping up, bear flag. It could be the Blur airdrop farmers, or it could just be people trying to sell. But nonetheless, from a technical standpoint, below these levels is not ideal. Same thing with Pudgy Penguins, pretty ugly week. It is staying within this range and channel. Losing that could be much more high risk there below that 5 ETH mark. Azukis. Let's see. I mean, we were trying to break out of this base, forming another little base here. We was hoping to get through that 15, and that's just not happening. It's actually going the other way. So be careful there. You got your Killer Bears. So your Killer Bears were kind of in this sort of triangle formation, and it looks like it's breaking to the opposite direction. So if you're a holder there, watch that. And you had a ton of volume here, so just take a look at that. And I'm not sure how much of this volume we can really, put too much attention on because of the Blur situation, but nonetheless. Campai Pandas breaking support here. We've been talking about this one for the last couple of weeks about it looked kind of extended. It broke the trend line, and now it is sort of breaking this mini pivot support area here to the downside. And, it had a pretty nice move. That was sort of expected on that one. Gutter Cat Gang has just been collapsing over the last several weeks. It hasn't really caught a bid at all ever since it broke this trend line here of that 5 ETH mark. You can see that, and then it's just kind of been down only. It does look like we're getting near a support area, and if we can close this weekly with a little hammer, like it looks like now, maybe we can get a little bit of relief rally here. But again, this thing, the whole market's not really looking well, and this is kind of just been being, a lot of fun with the Gutter Cat Gang. Hate to see it. The checks, Jack Butcher, it's kind of losing steam here. We talked about it was kind of holding up, but below this 1.5, you're now kind of, at this 1 ETH mark. So it's losing some steam here. Jack Butcher's tweets are not saving us, and I'm sad about it. Same thing with O'Peppin. You had that huge break. They sold most of it off, and now it's just kind of pulling back. These things were pretty extended. So, even though they were holding up, there was definitely riskier up at those levels if you were looking at it there. The one thing that is stable in all of crypto, apparently stable coins are no longer stable. You can't trust banks. The dollar's down only over, a long period of time. But somehow CryptoPunks are stable during most of this environment, which is kind of crazy. It's just kind of been chopping around between the 60 to 70 ETH mark for a while now. Can go all the way back to like October of last year. So let's see if this finally ends up picking a direction with the NFT market looking like it's picking a direction in itself. On-chain monkeys, they were moving on this, ascribing their collection on Bitcoin for a collection to ever do it, is what they say. But it's definitely extended into this resistance. You're getting that pretty ugly weekly reversal candle, so take a look at that. The so-called blue chips, CloneX, Moonbirds, Doodles, they're all, I don't even know if we should really be calling them blue chips at all anymore. I mean, they're all breaking support to the downside. As you can see here, CloneX breaking support over here, continuing this down move after breaking this important level here. Same thing with Doodles, where it broke this important level when Pranksy started selling his bag, and now we're going lower here. And Moonbirds is the ugliest one. I guess people did not like, as we covered Moonbirds updates last week on the show, they were pivoting to become the art collectors PFP project. It doesn't look like people like this, right? Or maybe, most of their holders at the time were not art appreciators and collectors. Maybe they were speculators or other things, and they did not like that news. So there's definitely a cleansing of that community happening. Same with Wreck Guy. If you're wrecked, which if you hold any of these projects, there's a high chance you probably are, depending on where you got in. But maybe buying a Wreck Guy is the right thing to do. But it looks like it's going lower. It broke this support. It broke that 1 ETH mark. It just kind of looks like everything else, where it's just pretty bearish across the board. Shout out to NFT Statistics. Follow him. Watch his daily show. Has the best data out there in the Web3 space. And he has his own large cap for NFT PFP index. And as you can see, it is also down. So it's also reflecting what we've just covered in all the charts. Moving forward, things that are impacting the market. So we're going to cover some volume. We're going to cover some things that could be providing some demand to the market and some supply to the market. And I think it's important to understand what events can cause potential demand or potential supply, and just to kind of see where we're at and who could be selling into our bags or who could be buying our bags. So starting off with volume, OpenSea daily volume, as you can see, it really hasn't done much. It tried to pick up in February, and it didn't really sustain. We're kind of back at those levels from previous months. And you can see here as well, in terms of ETH, it really has just stayed consistent, hasn't been able to pick up. OpenSea monthly active traders, it's been trending down ever since that blow off top last year. We had a little bit of breakout in terms of the active trader volume last month, and then just right back down, and it looks like this month it's most likely going to be low as well. So a lot of the volume that you'll see is misleading because of blur, but you could see that unique traders are not really rising with that volume. This is a great one by Hill Dobby. Shout out to him with the data. You can see that it looks like Blur daily trade volume is up. You can't really take that, what should I say? You should take that with a grain of salt because a lot of that is just wash trading, or you can call it airdrop farming. So you can see the blue is OpenSea, and that's just kind of been trending down for daily trades. And same thing for weekly trades. Blur airdrop, you can't really trust that. So there's nothing really positive on the volume front. One last one from Hill Dobby, just to compare with the other doing analytics volume. Nothing really going. Weekly traders kind of bounced a little bit, but kind of back down, and we're still close to those lows. So this is a better one where you can see it's trending down on Blur. Actually, right now, OpenSea has been trending down. Weekly traders has pretty much been down only for OpenSea. I know a lot of that's gone to Blur, but we don't really think that's a genuine volume. So volume not really looking too hot. Liquidity is pretty much drying up in most markets, but definitely in the NFT markets, as you could see. But in other news, we did have a Fed meeting. The Fed came out and they were hawkish. They said inflation looks to be still running hot, and most data points are saying that. And the market was predicting that there was going to be a 0.25, a quarter of a point jump in rates. And then more and more people were saying 0.50 based on the inflation data. I wonder how the bank blowing up is going to affect the Fed's decision on how to raise. They're kind of in this predicament, right, where they have to raise because inflation is running hot, but then things are starting to break in the economy. So should they pull back? Interesting times. The Fed's in a really tough position, but with inflation running hot, I don't see how they can really not raise just from this one kind of smaller regional bank going insolvent. So I'm not an expert, but it just seems like they're in a very tough decision, and inflation seems to be their main priority as they've repeated over time. All right, so the SEC is starting to lose credibility. I mean, the government and the media have been losing credibility for years, I think, here in America. But the SEC has really been losing a lot of credibility, and this week it kind of bit them in the butt, a lot of things that they've been saying and trying to do, especially towards the crypto industry. So the judge scrutinizes the SEC for the denial of the grayscale GBTC Bitcoin ETF. This was good news. In court, it looked like the judge was really hammering the SEC and asking them questions on how could there be futures trading for Bitcoin and Ethereum, but somehow we can't approve a Bitcoin ETF, spot Bitcoin ETF. So the SEC looks like they're kind of they're on the losing side so far of this court case, and GBTC jumped up 10% on this news, as that's bullish. Shout out to Hal Press, where he says there is a bunch of crypto FUD, but I want to move to this. Meanwhile, we are making real progress towards a spot Bitcoin ETF approval this summer. When does the market start to price that in? Because then, if that's the case, you're probably going to see maybe multiple ETFs. That's going to potentially be new demand for Bitcoin, as that will be a spot ETF. And you can see here, Eric says judge are now doubling on teaming the SEC with different questions. How could you guys argue that manipulation in the spot wouldn't affect the futures? Thus, the surveilling sharing agreement of futures isn't really meaningful, which your whole point is disapproving spot ETF. So it's kind of going against the SEC here. Another news, bankrupt Voyager was selling a ton of assets, as I think we covered last week in the show as well. They sold about $358 million worth for some different cryptos in the last 6 weeks. So that was, supply hitting the direct market and causing maybe some prices to come down, right? Also, shout out to Hal Press again, where he says, think this is why Voyager has been nonstop liquidating for 2 weeks, right? They needed to raise cash because they agreed to reserve $445 million after suit from Alameda Research. So far they raised $400 million, so it's good that they're near that target that they need to raise. But it looks like finally Binance was able to acquire Voyager and its assets. They've been denied it before, and it's finally gone through, which could mean, shout out to Hal Press, who's always got the great takes, where he says, looks like Voyager has started transferring assets to Binance US. I guess they aren't sending them there to sell and are instead moving forward with the recently approved asset sale. Maybe the end of the Voyager liquidation, which could mean that this supply to the market could be ending. And this was supposed to be one of the large last liquidations. We don't know for sure, but hopefully it is one of the last ones, and this sale may have solidified that. All right, and shout out to Hal Press again, where we talked about last week how Mt. Gox announced that they're going to be returning funds to those that have had it stuck in that exchange for years, which could potentially be supplied to the market. But he says, from what I've gathered about Gox, I think it will work as follows. Spot will be distributed to the exchange of your choosing around May or June. Then the exchange will have a lockup period of 1 to 3 months before those coins become liquid and be able to sell or trade on the market. So those coins will unlock from around June to September. So it means that supply, potential supply, or potential demand where they take that Bitcoin and just buy other cryptos, is going to take a while, right? Until later this year. So nothing to worry about so far, it seems. Shout out to NFT Statistics. We're on his show and on Twitter. He illustrates that AI art on the Brain Drops platform is absolutely going parabolic. As you can see, 4 different collections within the Brain Drops platform, AI platform, is just going straight up. As you can see, they're all kind of breaking out, parabolic. The Brain Drops index is up 4.5 times, and it's had one of the better performances this year out of any art or NFT in the entire market. AI art, I think, is a fundamental shift in creation, and I think it's going to continue to really do well. And this is just the beginning. Brain Drops seems to be the AI art. The AI art blocks of NFTs. So good to see that happening. There's always a bull market somewhere. Shout out to Dylan Leclerc, where here he illustrates that liquidity is drying up in the crypto markets. So you can see here, this is the lower this goes, the less the liquidation. The liquidity. So you can see when the FTX collapse happened, liquidity really started to dry up, and we're actually much lower than there. So watch out for illiquidity to both the downside and the upside here. Just something of note. Also, shout out to Dylan again, where he points out, and it's always good to know if an asset has a lot of long-term holders or a lot of paper hands. It seems that the percentage of Bitcoin holders that have been holding for longer than a year has hit a new all-time high, which is always good to see, right? Because even though price is coming down, people that are hoarding Bitcoin for longer time periods seem to be still holding. And, you know, it's bullish if long-term holders are the majority and or, you know, a big percentage. So this is cool to see. The more banks, shout out to Hal Press, with the whole Silicon Valley Bank going bust, I think he's right. It's a lot of pain for a lot of people in the short term, but in the long term for crypto seems to be bullish. The more banks that go bust, the more bullish I will get on crypto. And again, he says in a couple months, a lot more people are going to have a long-term allocation to Bitcoin and Ethereum than they did before. And patience will be required, but the worse this gets, the better it will be for global crypto adoption as they find out that banks are not safe, and in this case, depositors will get paid back, hopefully, and we'll be getting into that. But again, you know, you don't want to be dealing with that, especially over a weekend where everything's closed, you don't have access to things, you have to wait for a Monday. Bitcoin literally solves this problem. So I think this is definitely bullish news. Pain is the #1 motivator for humans, and in 2008, when banks failed, there was no alternative. But now we do have an alternative, that's crypto, where you own your own money. And unfortunately, I think it's going to take massive pain with traditional financial institutions for regular people to start to appreciate what crypto offers. All right, let's jump into some large sales. This huge 440 ETH sale for this Trippy King. Super cool looking ape. Shout out to NFT Statistics. As well, CNAX, I hope that's pronounced correctly, just sold this piece for 13 ETH on the AOTM platform. This beautiful piece by Bads Do sold for 10 ETH, as you can see here, 15 grand. Cool piece, does really nice art. You love to see it. A 350 ETH Fidenza sale was just had, and that wasn't the only one. One that's even higher for 380 ETH. this beautiful Fidenza. It seems to be more on the rare side, where they're sort of like more thin and more lines throughout the piece, where these are more thick and cover up more of the piece in general. So love to see it. Fidenza's still selling. Let's jump into some new mints. Shout out to John Carlos, where this is on his new newsletter, the Mint List, and where he illustrates the upcoming mints. And it looks like we got the Yuga Summoning coming up, Artifacts, Animus, which I believe is the eggs drop, Fuwu, Ether, Moonbird Mythics, Starbucks launch. We'll be talking about that and a few others. So if you're interested in those, keep an eye on that. This beautiful beast by DK, who is one of my absolute favorite artists in the space, where every time I experience his art, because they're usually animations like this one, I just took a screenshot, they really give me this special feeling inside, this feeling of joy, and not many artists make me feel that way. So excited to see this drop happen and to see who it goes to. All right, shout out to Petaverse Network. It's a new drop that's happening on March 13th. And you could say mint day you could see that they are saying mint day is right around the corner on the 13th. They'll be introducing a wait list a couple days ago is when they announced that. The edition is going to be 7,777. You can mint for 0.15. And this is some things that they say they're promising to holders: a VR experience, a Twitch integration experience, pet breeding, all sorts of things. They have a roadmap, so check that out. Also, Candy Digital is doing a drop of Getty Images, and what they're doing is an inaugural 70s music and cultural collection that's celebrating the moments in time that define music and culture in the 1970s from some very popular photographers. So some of the photographers that, some of the artists that were photographed by these photographers is Elvis, David Bowie, Stevie Nicks, the Rolling Stones. So some cool artists. You'll be able to collect some of these. Shout out to Lucky Trader, where they give us the outfit. The collection will be on March 21st at 1 p.m. And some will be able to be bought for $25 for the images, and then some collections will be going for $200. So if that's your thing, that will be dropping. Also, Pinder Van Arman, which is a very known AI artist in the space who's been absolutely killing it. He has an AI art collection dropping soon on March 14th. As you can see here, these are the details. You're going to need a mint pass. If you're interested, check out the Bright Moments Marketplace. You'll be able to get all the info as well. But it's going to be a Dutch auction starting from 10 ETH all the way down. All right, so this was the hot mint of the week, it seems. The Quadratic Funding Collection that was, Vitalik Buterin, the creator of Ethereum, was involved here, and that's why I really call it a lot of hype. So this is what the NFTs look like. This is in respects to quadratic funding and public goods. As you can see here, Vitalik was one of the founders. Kevin, who's the founder of Gitcoin, sorry. And you can see where all the funds are going. You can see that this is in respects to a published proposal for funding public goods way back in the day in 2018. This money will be going to public goods, and it's also, as you can see here, these creators here wrote a paper. It's called A Flexible Design for Funding Public Goods. They've signed it. I believe 12 people are going to get these physical copies. You can see here Meta Label, which this drop was via Meta Label, the platform. Each record in the Quadratic Funding Collection contains several pieces of media, digital signed copy of Liberal Radicalism, the name of this paper, in addition to 2 essays by Gitcoin co-founders. So they're really trying to just pay respects to public goods, and they did raise a good amount of money, millions of dollars on the secondary market. And as you can see here, shout out down to FC Statistics, where he says that this one was sold for 52 ETH. This one was signed by Vitalik and a few others. They paid royalties. And apparently the reason why it sold for so much is, I believe, shout out to Tio, is this is the original 12, which, if I have this correct, they will be receiving a hard signed physical copy. So that's what was going on there. And this is sort of charity sort of NFT drops. So it's good to see that, Gitcoin's done a lot of great things for the space, and good to see that hopefully this money is going to really good use. All right, but of course you know that Blur airdrop farmers are going to do what they do. Shout out to Cirrus, where he says Machi is now up to almost 1,500 Gitcoin NFTs, these exact NFTs. And he owned 16 of the supply. He ended up losing a bunch of money on these. I really don't know what's going on over here with Machi Big Brother, but you know, Blur airdrop farmers are going to farm. That's what they do, right? And this is sort of the chart of that NFT. It really took off from a really cheap mint price and all the way almost to 0.7. Really retraced a bunch, and now I believe that the price was hovering between 0.4 and 0.5. All right, let's jump into some NFT news. I love to stay up to date with Ordinals because I really do think something's happening there that's going to be here for the long term, and it's always adapting, and I'm trying to just have a grasp on it. So, Rollkit just announced that you can now run a sovereign rollup on Bitcoin, announcing the first research integration of Bitcoin as a data availability layer for sovereign rollups. Shout out to Eric Wall, where he says, it turns out that putting this 4 MB JPEG on Bitcoin, their JPEG NFTs called Taproot Wizards, on Bitcoin really got builders alerted to the idea that with Taproot, you can inscribe any type of data into Bitcoin, not just NFTs. So you're going to see builders start to tinker and experiment with different sort of, with inscribing different sort of data onto Bitcoin via Satoshis. And he refers to the Rollkit dev proposing this entirely with new demand for Bitcoin blockchain space, which of course is better for security, as we talked about. Shout out to Delmo, where he illustrates, in the shadow of the Blur and OpenSea conflict that we've touched on in detail over the last few weeks, Ordinals are quietly having their own marketplace wars. As you can see here, there's 4 different marketplaces that are involved in this marketplace war. And he says, with already $6 million in marketplace volume and almost 10,000 unique users, Ordinals definitely is something to look at as something that is here to stay. So very interesting to see that continue. I think this is one of the best takes on the whole Ordinals and ERC721, which is an NFTs on Ethereum. I think this is one of the best takes. And shout out to Fubar, who usually has really good takes. So he says, it's easier to put on-chain data in Bitcoin than it is on Ethereum, as in on Ethereum, it's more expensive. EIP4844 data availability pricing might change this. Amazing to see Bitcoiners embrace experimentation. Smart contracts still give better composability in terms of Ethereum. But maybe the optimal platform for one-of-one art is Ordinals on Bitcoin, because it's all going on chain. It's much cheaper to go on chain, and Bitcoin is, you know, the most decentralized blockchain in the world. So it may be ideal for artists or people to put one-of-one art on that chain, where it's cheap and on chain. With Ethereum, it's not as cheap to put on chain, and being on chain is a much more secure thing. So great take on that. This was really funny. Shout out to Mike Dudaz, where he shares with us that Ryan Carson, who we talked about in our last couple shows, where he pretty much cried on a Twitter space and completely left the Web3 space after doing some really questionable things, is now on LinkedIn pitching AI stuff and hosting AI shows, and I guess it's their form of Twitter spaces. So, you know, say what you say about Ryan Carson, if he's a grifter, if he's just somebody who likes to take advantage of opportunities and wherever he possibly can. But now he's over there shilling AI, which I think is funny, because it was like literally 2 days after him crying on the Twitter space. He literally wasted no time. But that's what happens. Well, this was pretty big news. Amazon is dropping an NFT marketplace next month. Shout out to this guy, where he says the company appears to be planning to make its customers play crypto games and reward them with free NFTs. I can't believe they're going to try to incentivize people to use their platform. As we know, crypto NFTs are phenomenal for that. So, and in the article, it states tech giant Amazon to reportedly launch its NFT marketplace next month, with 15 NFT collections already available for the launch date. Amazon plans to launch the Amazon Digital Marketplace on April 24th. The platform will start offering the service to U.S. customers first and will gradually roll out to other countries. Really interesting. We all know this is kind of where it's heading, and it's inevitable for brands to start to utilize a lot of these digital tools that have been birthed from Web3. Other big news, Yuga finally launches their 12-fold generative art NFT project on Bitcoin, and it actually concluded, and the results are in. earning a total of 735 Bitcoin, about $16.5 million in the 24-hour auction, with the highest bidder paying $161,000. The biggest bear market drop by a mile, and it wasn't even on Ethereum, it was on Bitcoin. Shout out to Trouble Farmer. I'd say the Yuga or Nose experiment was a massive success. And then here you can see the top 10 bidders on the auction, which was live on their website. And Yuga just seems to just not be able to do any wrong. And they killed it with this drop over on Bitcoin, and they saw the potential for ordinals. So shout out to them for trying new things. And here's them stating that the 12-fold auction has ended. Congratulations to the 288 bidders. And you will be receiving your subscriptions within 1 week. Valid bids that did not rank in the top 288 will be receiving their money back. One of the criticisms about this drop was that you literally had to trust Yuga with your money. So it was not decentralized. It was not trustless. When you bid for this collection, Yuga was custodying your money. And if you did not bid in the top 288, they had to manually send you your money back. So you had to have full trust in Yuga Labs, which some people criticize as this was a bad precedent for other people to do something like this and people to get scammed because you can't always trust everybody, right? Of course, you could probably trust Yuga as they're a public company. They have tons of shareholders. They have to do the right thing. But again, that was a controversy there. Shout out to Noun40, who is a very well-known noun in the Nouns ecosystem, brings a ton of value, where he shares that 20 zero-knowledge teams of this caliber is just incredible. So there was a new prop house that where it was for zero-knowledge proof building, and 20 proposals were received from top zero-knowledge teams. Nouns DAO can vote for them, and the top 3 will be granted $70,000. Further evidence that the Nouns is becoming a gravity well for talent due to the quality of attention and legitimacy building within Nouns can bring to early prototypes. This was the case for Nouns Agora, Hey Noun, etc. It's really, really interesting things that are happening in Nouns. It doesn't get enough attention because, you know, it's not really speculators, it's real builders. And I think that Nouns is really doing something special, and especially in a bear market, they just continue to do cool things. Shout out to NFT Statistics, where he shows here that Memeland, which is an NFT project, they bought a bunch of apes, they staked every single one of them, and with the staking, they're making about $45,000 a month, and is going to distribute it all back to Captain holders. So if you own a Captain NFT within the Memeland ecosystem, you can send it on quests, sort of like a different, something similar to staking, and so they've always done a bunch of weekly giveaways to their holders in a form of raffle, but they did just buy 8 Bored Ape Yacht Clubs. They're looking to give all these staking rewards back to holders. So let's see what they got in store with that. So Serpunk, that's your boy. I'm showing here that Illuvium, one of the popular Web3 play-to-earn projects, just had a big drop this weekend. And at the time when I took the screenshot, they had sold 105,000 NFTs out of a total of 120,000. Then they're doing all this via the immutable blockchain. This is very impressive in the bear market. It is very low price points, so that helps. But still, even in this market, they actually did sell out, and which means they sold out 120,000 NFTs for a total of $8 million, which in this market is extremely impressive. Like I said, they're one of the more popular Web3 gaming ecosystems. So even in this market, gaming startups are able to raise significant capital via the NFT model. And you can go on their website and buy this on secondary if you'd like to participate in their upcoming beta to their game. All right, talking about games, other side, they announced Voyagers. Get ready to return to the other side for your second trip on March 25th. So they did their first trip where you were able to test out the virtual metaverse via the Improbable platform. And now they're doing their second trip. But this time they're saying holders will also have the opportunity to invite a guest into the second trip. So any Bored Apes out there, if you guys want to give me access, I would definitely accept it. So Sappy Seals, they say roadmaps suck, but they released a roadmap. So Web3 people, that's how they are. So they called it the grand plan, where it's just a bunch of stuff. Don't really know what's going on, but it looks like there's some plans in here for the future of Sappy Seals. So look forward to that. Pixel Vault has really been dropping a lot of like future plans for the rest of this year. And they dropped a video. I wish I could play it, but that would take up too much time. And essentially, they in a short, very well done video, they illustrate everything that they have planned for this year for the Pixel Vault ecosystem. And we talked about their reboot gaming protocol that they released last week, the white paper, and they added some additional news here for future plans. So shout out to Pixel Vault. Go check out the video and see what they got in store. I love to see that they've been building and they've been releasing a ton during this bear market, as a lot of projects have been taking a hit, and you haven't been really hearing from many projects. So these guys are still going. Shout out to Seneca. We talked about nouns earlier, where they're attracting high-quality people to build high-quality tools for the whole NFT ecosystem as public goods. But here he says, I was on an onboarding call for a new community joining Prop House, which Prop House is where communities can go to attract people to build certain things for them, and they pay them with the best voted proposals. They asked about Agora and how they are interested in using it as well, which Agora is a platform that was birthed out of a prop house that was funded by the community. Slowly but surely, Nouns is seeding an entire suite of open source infrastructure for any internet community to use. And I really do think this is important. It doesn't get enough coverage. I love Nouns, as you guys know, but still, I think this is a really interesting DAO and precedent for what the potential future digital communities. All right, moving forward, Starbucks Odyssey. We know Starbucks, we talked about them on different shows, but they just had a recent drop. They sold 2,000 NFTs in about 20 minutes, and it didn't even include coffee. And they sold 2,000 tokens for around $100. Lucky trader with the stats here. They break Nifty Gateway because too many people were in there at once trying to buy. It was called Siren Collection, with most eligible minters unable to get to the site to load. The site crashed, so it wasn't the best experience, but that's what happens when there's a lot of demand for a drop. So now, the Starbucks Odyssey program, their whole ecosystem, contains about 47,000 NFTs and has seen over 550,000 in secondary volume. You know, so I think Starbucks is really leading the way here on utilizing NFTs to connect more with their fans and raise money, right? And provide better perks. So you're going to see this a lot more with brands, and this is just the beginning. Frank, the founder of DGods and Utes, just released a statement in his Discord that he posted on Twitter. And he says, I am aware that there is a growing portion of holders that are disappointed with our team over the last 2 quarters. Well, of course, there's really nothing that's been come out of the ecosystem, right, besides a couple parties. And he says, I think that's a fair take. The problems, Use Art hasn't revealed, Use Art reveal was delayed for 2 months. Nobody knows what the hell Dust Labs is. Nobody knows what U points or D points are. He just goes on a list that basically they haven't really been doing much. And honestly, he came out and just pointed out all the things they've done wrong and says, I'm going to be doing a lot more communication with the holders every week. But he talked about no solutions. So I don't know what's going on there, but maybe he's holding that back for when he does his weekly communications with the holders. But again, I'm not really expecting much from projects nowadays besides a select few. So I'm not really surprised if that ends up being the case. Shout out to Beeple. Man, what he is doing with the new factory is just bonkers out in South Carolina, Charleston, in his hometown. It is a 13,000 square foot gallery. And there was a grand opening to this gallery, the 13,000 square foot gallery. Sorry, the grand opening was this weekend. Here is a picture of his piece that sold for $69 million. It was the 5,000 digital pieces that he made all in one. And you can see the people all at the factory. This place is massive. This picture doesn't do it any justice. And it's just great to see. I think Beeple's really going to put on for Web3 with this whole warehouse. And so I'm excited to see it, and hopefully I can make it out to one of the events. Shout out to On-Chain Monkey, where they say they are dropping another collection on Bitcoin which we know that they were apparently the first NFT project to fully be on chain on Ordinals. But this one's called Dimensions, right? So Dimensions marks a significant leap forward in using Ordinals to inscribe high-end art on Bitcoin. All on-chain Monkey members will have a chance to access the upcoming Dimensions launch. So, as we know, their price has been pretty much one of the only projects that has a rising floor price, and people, I guess, for now, are caring about these drops that they're going to get on the Bitcoin blockchain for on-chain monkeys. All right. That's enough for NFT news. Let's jump into what's happening with crypto. And really what's happening with crypto is that the government is attacking crypto. I truly believe that after everything I've been reading. And Andrew makes a great statement here referring to that, where he says, if you are keeping score, the White House announces plans to add a 30% tax to people who are mining Bitcoin and other digital assets. New York is suing KuCoin, which is a crypto brokerage, and is trying to say that Ethereum is a security. Elizabeth Warren celebrates Silvergate, the largest crypto bank in America that is just getting liquidated, as we'll be getting into that. And a whole bunch of other things. This all happened within the span of a couple days, really a week for all of it. But it really seems like the government is trying to make it really hard for crypto companies to succeed. As you can see here, that was the news that New York claims Ethereum is a security in the KuCoin lawsuit. President Biden calls for the 30% tax on all electricity used to mine Bitcoin. And his reasoning says is an excess tax on electricity usage by digital asset miners could reduce mining activity along with its associated environmental impacts and other harms. Oh yeah, let's tax Bitcoin mining and all mining because it uses energy. But again, we use energy in very weird ways in general. You can argue, and this is sovereign money. So can you argue this is energy well used? I would say yes. Other people might say no. I don't think they appreciate crypto, like I said earlier in their show, just yet, until max pain has been reached. Shout out to Ignis, who does a ton of DeFi research on Twitter, where he breaks down a new it's a new crypto wallet that is using the account abstraction, what they call smart accounts, that we went over in detail last show. And this is going to be a real big push forward for crypto adoption, in my opinion. And the protocol is called Avocado, and he breaks it down for us. And I think this is a really important point with this protocol. I think it's going to be a game changer. This address is the deterministic smart contract algorithmically linked to your wallet address. What the hell does that mean? Well, it's essentially a crypto wallet. It's non-custodial, and it's using smart accounts. So you can send any token from any supported chain to one address, and the balance will appear on the Avocado network. That's a big deal. As a crypto user, it's been very annoying to have to switch different blockchain networks and then have to buy crypto in that denominated crypto that's used on that blockchain specifically. And it's an annoyance. But this is fixing that, and I'm glad to see it because I've been waiting for this. So when adding Avocado network, you'll see that all gas fees are paid in USDC. So you can fund USDC from any chain and use it to pay for transaction on any network. So if you're using a protocol that requires Arbitrum, a layer 2, or Optimism, another layer 2, or Polygon, right? All these layer 2s that protocols are integrating because it's cheaper and faster, you always have to switch the network and then buy their coin. Well, with Avocado, if you switch to the Avocado network, it doesn't matter what chain that they're using. This means you don't need to manage different gas tokens for different blockchain networks anymore. All you need is USDC, digital dollar, and you can pay for gas for no matter what chain you're on. So that really removes a barrier there. And that's not all. You can connect to any dApp to your Avocado wallet and approve all transactions via the Avocado wallet instead of the dApp itself. So no need to check which chain the dApp is connected to. And another game changer is the way Avocado is trying to incentivize protocols to integrate Avocado is, well, it is charging a premium to users like us, additional 20% on gas fees, which could be a lot depending on the transaction. But it could be smaller for layer 2s like Arbitrum. half of the fee would go to the dApp itself that is supporting Avocado protocol. So it's incentivizing protocols to use Avocado because they're going to get a percentage of that gas fee. And then they do have a token, so apparently if this takes off, value would be hopefully accruing back to that INST token and token holders. Another really big news with Coinbase and related to wallets. Today we introduced Wallet as a Service, making it easier for any company or brand to seamlessly onboard their users to Web3, even if they have never used cryptocurrency before. These are the exact products that are going to bring the next several million users into crypto. And Coinbase really has been just launching tons and shipping a ton of things lately. So they break it down here. Wallets deployed using Wallet as a Service use advanced multi-party computation, MPC, for added security, helping keep user assets safe by securely dividing, encrypting, and distributing keys among multiple parties. So what the hell is MPC? What does this mean? Well, because Wallet as a Service is powered by MPC, cryptographic technology, MPC allows a key, which is usually your seed phrase that we have to write on paper and store somewhere safely, to be split between the end user and Coinbase. Ultimately, this means that self-custody keys are safe even if a user's device is compromised. Furthermore, advanced and automatic backup with MPC guarantees that even if an end user loses access to their device, the key to their Web3 wallet is still safe and can securely be stored. We talked about last week the benefits of account abstraction and smart accounts, how now we'll be able to provide social recovery to NFT wallets that are hacked or you lose their seed phrase. This is a huge step forward. This seems to be what they're using here. And now, if a normal person can open up a crypto wallet with simply an email and a password, and if they lose it, they can recover it. And prior to that, you can't, right? Like right now, if I use my MetaMask and I lose it, get hacked, I have to make a whole new wallet. I can't really access that again if I lose my seed phrase. So I think this is going to be huge. Big brands are probably going to adopt this method as this is much more user-friendly. Key ownership. Users have full control over their assets, including option to export their keys. So as you can see here, the keys are distributed between you, the user, and Coinbase. Which you might say, well, then that means Coinbase has access to my money. That is true, only to make social recovery a thing. But if you say, screw that, I don't want them to have my keys, well, then you do have full control over your assets, including the option to export those keys off of their platform, and then it's fully non-custodial, which means you fully own it and have full power over that. It's basically eliminating this huge source of friction of getting Web3 adoption. So basically, Coinbase is saying, we have created a system to give wallets literally to every human on the planet in a way that they are used to. Well, email, password, social recovery, things go wrong. That's the kind of product we need. And they did just drop Base, which was their layer 2 that we went over that in our previous show. So if you combine Base, the layer 2, with this now Web3 crypto, Web2 friendly crypto wallet, a significant number of potential customers are looking at a package deal that includes both Base and the wallet as a service. So I'm assuming they're going to onboard a ton of companies as a package deal to both the layer 2 and the crypto wallet. Bullish Coinbase, they are really going to, I think, help with mass adoption. You love to see that. In other news, JP Morgan is cutting ties with crypto exchange Gemini as crypto has just been really just getting hit in all different directions. A lot of Web2 institutions are cutting ties with them because not only is it a bad look, it's risky, and it's no longer worth that risk to JP Morgan, apparently, right? So not a good look for Gemini. Silvergate. We've been talking about Silvergate in the past. They've been getting demolished in terms of price, but also they have decided to shut down operations and liquidate the bank. Not good. In light of recent industry and regulatory developments, Silvergate believes that an orderly wind down of bank operations and voluntary liquidation of the bank is the best path forward. All customers, but see, this is the difference between this and the Silicon Valley bust that we're going to get into in just a minute. All customer deposits will be fully repaid per a liquidation plan shared this afternoon. So the people who were depositing money with Silvergate are not at risk. You know, only the shareholders and those guys are at risk, which will probably not really be making any money. But depositors are fine, and that is not the case with Silicon Valley Bank. All right, we talked about the government attacking crypto. Well, Illinois is taking it to another level. Shout out to Alliance DAO, where they give us a little TLDR of a new bill that was brought up in Illinois, which I hope does not get passed, or at least is adjusted. And I'll say it in their words, where they say a bill in advance that would make unlicensed digital asset business activity, most blockchain activities, a felony. If the House passes this bill, it could become law in a matter of weeks. Alliance opposes the Digital Assets Regulation Act. That's what it's called, DARA. So what does DARA do? It effectively bans DeFi protocols and core infrastructure like block validation, captures the entire industry, all of Web3, grants sweeping investigative and enforcement powers to the state, has impossible compliance requirements. This is not good for decentralization and crypto in Illinois. This bill would kill DeFi in the state of Illinois. Given the permissionless nature of decentralized protocols, developers and possibly even DAO members could face criminal prosecution if Illinois residents transact with their decentralized protocols. Not only would decentralized protocols not be able to qualify for licensure, it would be impossible for them to meet some of the licensure requirements. It's just making it impossible for crypto companies to operate. All right, so that's one thing. One positive thing, though, I guess we could say here, is that CFTC chair, which is the Futures Commission chair, doubles down on his take that Ethereum is a commodity and not a security. So he is going against the word of Gary Gensler, who is leading the SEC right now, who is trying to say that Ethereum is a security. And he continues to attack crypto and not protect investors in the best way. So shout out to How Press, where he says, we have regulated, this is quote from an article that from this man right here, the CFTC chair. We have regulated Ethereum derivatives. It's not a coincidence that those futures were listed on the CFTC markets. We did the analysis. The listing exchange did the legal analysis. And the analysis led to the conclusion that Ethereum is a commodity. And I've been pretty consistent with that in the past, right? So Gary Gensler in the SEC is trying to fight that. And the futures chair is going against their organization and their goals. Something is happening here. Shout out to Foobar, where he says it's refreshing to see the courts hand down a double dose of reality to the SEC. The SEC has been taking losses because they're trying to do things that just don't really make sense anymore. So, and the two things that prove that they've been taking losses is that they've been fighting the GBTC spot Bitcoin ETF, and we talked about that earlier. The judge was hammering them with questions to say, well, why is this happening in the futures market? Why isn't that happening here? You guys are not really making sense, is what my take from that. And GBTC was up 10% from that. And also, they tried to stop Binance from buying Voyager for I don't really understand why, a legitimate reason, but it finally passed, right? So a judge the SEC is overstepping their power, and the judge came over and said no, right? So SEC is losing credibility as we speak. And shout out to Frank, where he quotes another leader in the space where he said, there is nothing really stopping a bank from banking a crypto company, but your bank regulator is going to come look at your books more frequently. Let's say every 6 months instead of 12 months. And that makes your life more difficult, and it drives up compliance costs. So unless a crypto firm is a really big revenue generator, the juice just isn't worth the squeeze for banks. So basically, the government is making it really tough for institutions to do business with crypto companies, and it's not worth their time and money anymore. So, and it's really choking the crypto economy in America, and it's pushing a lot of these companies overseas. And crypto's the future along with AI. And if we don't become a leader in that, that's going to be a problem. We talked about that before. Anyways, some of the biggest news in a long time in finance. Silicon Valley Bank. It was the 18th largest bank in the U.S. by total assets, and it's the largest bank failure since the Great Recession in 2008. And bank regulators seized the SVB Bank in largest bank failure since the Great Recession. So it's the second largest bank failure in U.S. history. Only Washington Mutual was bigger, as you can see. In 2008, they had $307 billion in assets. Shout out to Matt, one of the founders of Paradigm, largest crypto VC firms in the space. Bitcoin and he makes a good point here. Bitcoin and Ethereum may be volatile, But if you own it, you own it. There's no counterparty risk. There's no intermediary that you have to trust to do safe things with your money, right? Or risky things. You don't have to worry about that. USDC deposits at a bank are stable relative to the dollar. But don't forget that your money at a bank is not your money. They're IOUs, because the bank is utilizing your money to do other things. So here is me illustrating charts. SIVB, Silicon Valley Bank is the chart on the left where you can't see it perfectly, but it's down 86%. And it's probably going to be worthless on Monday, right? SI down 98%, which was the crypto bank. A lot of regional banks are in trouble right now. We're going to get into it. And this is the Silicon Valley Bank into Friday. There was absolute panic, and for good reason. And this is another bank, another regional bank, Signature Bank, which also did some crypto dealings, down 75% from all-time highs. So what was announced? The FDIC is taking over Silicon Valley Bank, and they were appointed to be the receiver, right? So they're from now moving forward, they're going to be trying to make depositors whole, and they're going to be running the all the processes here. So, of course, with a bank, there is FDIC insurance, and as a depositor, you're entitled to this. But bad news, Stephen outlines it here. Thanks, Stephen. Reminded that only up to the first $250,000 in your bank will you be insured by FDIC. Suddenly, very relevant, as we just had one of the largest bank failures in U.S. history. So, Silicon Valley Bank did a lot of business with a lot of companies, and primarily the tech industry. A lot of these companies had much more than $250,000 at this bank. Actually, you want to know how many? 87% of Silicon Valley Bank's deposits exceeded the $250K limit of FDIC. So that means out of $151 billion, out of $173 billion of their assets, $151 billion of it is above that threshold in terms of customer account deposits. So that means that most of these people are screwed, right? Most of these companies are screwed. They can't pay payroll. They can't pay vendors. This is not good, right? And this is a perfect example of this. A customer of a tech startup called Camp sent out an email to their top customers, and this is what they said. Unfortunately, we had most of our company's assets at this bank, Silicon Valley Bank, which just collapsed. We are hopeful that this is resolved, but in the meantime, we are turning to you, our most valuable customers, for help. All sales from this point forward will deposit into a Chase account and allow us to generate cash needed to continue operations so we can continue to deliver unforgettable family memories. They're offering a 40% discount on everything online, and the code is bankrun to check out, which I think is great marketing. But companies are hurting. They don't have access to funds. They have bills to pay. They have people to pay. And they're doing things like this, regular tech startups, because they don't have access to their money at the bank. Shout out to Lindsay, which I teared up reading this Twitter thread yesterday because it really touched me. She said, I live in Ohio. I'm a mother of 4. I employ 15 people at my startup. She's the CEO of a startup called Strong Suit. She drives a used car. Husband works in manufacturing. The financial future of her small startup, team, and family are at risk with this collapse. The collapse of SVB might look like a 1% problem, right? Which a lot of people are saying, oh, screw the tech founders and the VCs, screw them, right? She illustrates that the collapse is not only hurting these top 1% people, right? The coastal tech elite. Not true. This impacts small businesses made up of hardworking people making modest mortgage payments in the Midwest. This impacts parents putting dinner on the table. So I think it's easy to say, screw the depositor. They should have known best. Screw tech companies. They have money. VCs are funding it all. They need to learn their lesson. But some of these depositors are people like Lindsay, who are who's a mother with twins when she started her startup and worked her butt off. And now she's going to be extinct from the marketplace because of the actions of a bank that she's supposed to be trusting, right? I think that we should be a little bit more sympathetic. But again, everybody has their own thoughts on this. I'm not here to I'm here to more just share the news. Bill Ackman, who owns a really large hedge fund in America, he says the government has about 48 hours to fix a soon-to-be irreversible mistake. By allowing Silicon Valley Bank to fail without protecting all depositors, the world has woken up to what an uninsured deposit is, an unsecured illiquid claim at a failed bank. Naval, he says, if businesses lose money on deposits, then every business in the country will move all cash above $250,000 into treasuries, because we know they're paying about 5% right now, and a bank will pay you like 0.5%. There's really no reason to be holding your money in a bank if the treasuries are offering this sort of interest rate on your money. And we'll have a system-wide bank run at Twitter speed, because we all know that we can now do all of our activity at the bank on the phone, for the most part. They'll tell their banker, the only counterparty I want is the U.S. Treasury, right? Because if you hold money, we'll get into it. The FDC and the Federal Reserve are creating a fund that would allow the regulators to backstop more deposits at banks that run into trouble following the Silicon Valley Bank collapse. So the Fed is starting to act, thank God, because this could really become a problem and a trickle-down effect and really collapse all regional banks all across America. Because if you think about it, if one regional bank goes down, and as a depositor, you're only covered for $250,000, why would you keep anything above that? It's too risky. You're going to go to all the big banks where you feel safe, and maybe you put the rest of the money in treasuries. So then what happens to regional banks? There's a bank run on all these smaller banks across America. That's a problem. And if the Fed doesn't come in and put a backstop and makes these depositors whole, then other customers in other banks are going to panic, right? So the U.S. Treasury Secretary, this just came out, U.S. Treasury Secretary rules out a bailout for Silicon Valley Bank. But they said, and this is from the Financial Times, Janet Yellen, which is the U.S. Treasury Secretary, has ruled out a bailout, but said the government will aid SVB depositors. And the government is working alongside regulators to explore the best revenues forward. So that is good news. I kind of think that's the right thing. I don't think we need to bail out the bank, because the people running it obviously did not do a good job. The shareholders took a risk by investing in this bank, and they should have done their due diligence that their balance sheet was not healthy. So that's okay. But the depositors who are just customers that shouldn't be having to do deep due diligence into their bank to bank with them should be made whole, in my opinion. And I think it seems like they're doing the right thing here. All right. That was the big financial news, which if that affects tech, that means that affects VC investing. That means that affects crypto, because it's tech, and it's a downward effect, right? USDC depegs. This was due to the Silicon Valley Bank collapse. Why? And Circle, which owns USDC stablecoin, one of the largest stablecoins in the world, Circle and Coinbase own it. Following the confirmation at the end of today, this was on Friday or Saturday, that the wires initiated on Thursday to remove balances were not yet processed. $3 billion of the $40 billion that Circle and has in USDC reserve remains at the bank. So that's only about 8% of the supply, which isn't nothing, but it's very manageable. So it's good to see that. And what's crazy is that $42 billion came out of Silicon Valley Bank in one day. For several reasons, right? Because some people want to move their money to treasuries and make more money, because they wouldn't share profits. They wouldn't share some of the profit with their customers, right? They were still giving them 0.5% on the savings account. And Silicon Valley Bank began to sell stock because they were underwater on their bonds and took a huge loss. So people started to panic, and $42 billion came out in one day. That's how crazy things can get and how things can change so quickly. All right. In terms of the depegging, Fubar says this is getting absurd. So at one point this weekend, USDC, if you traded your USDC, let's say you had $100,000, you were getting back 89 grand in USDT. That's how much the depegging was for USDC. And shout out to Hal Press, where he did some analysis prior to Circle even coming out with what their situation was. Circle holds 77% of their reserves in treasury bills. These bills are held at BNY Mellon and managed by BlackRock. That means that, of course, you can trust Mellon and BlackRock in this situation. They have healthier balance sheets. They're much larger banks. So the absolute floor for USDC, just based on their cash on hand, was 0.77. And you can argue it's much higher than that because it was only 8% of the supply that was at risk with Silicon Valley Bank. So they could definitely use external resources and raise that money, I think, fairly quickly. So the floor was probably higher. But just based on cash, 0.77 was probably the minimum. It's extremely hard to envision a scenario where you lose money buying USDC below that. And most likely, I think USDC ends up fully repegging. And I'm buying more at 88 cents, right? When he saw this, as it simply is the best risk reward I have seen in a long time. I think this was some incredible alpha that he was sharing, and a lot of people took advantage of that arbitrage opportunity. And of course, Coinbase, who is creator of USDC, they temporarily paused the conversion of USDC stablecoin crypto into regular dollars. So that also provided a backstop to a mass panic. Jeremy, which is the CEO of USDC, Circle, which created USDC, he says this: while USDC can be used every single day, even on weekends, on-chain, issuance and redemption is constrained by the working hours of the U.S. banking system. USDC liquidity operation will resume as normal when banks open on Monday. As a practical matter, our teams are well prepared to handle significant volume built on the strong liquidity and reserve assets discussed below. As a regulated payment token, USDC will remain redeemable one for one. And I really do think he's telling the truth here. As you can see, all their reserves are public. All right. What do they expect with Silicon Valley Bank and the FDIC? Well, he says, we have reason to believe that under FDIC policy, transfers initiated prior to bank entering reserveship would have otherwise been processed normally. TLDR is if you tried to pull out money from Silicon Valley Bank, as they did, on Thursday, then you're most likely going to get 100% of that on Monday. Not guaranteed, but likely. And that would just make them back to normal, right, where they have access to all their funds. So you can see that the pegging was pretty steep here, but it is back based on them coming out and saying that it's only 8% and things are looking much better, right? So this was the arbitrage opportunity. In my opinion, it was a very high probability arbitrage. Even though it was only a 3 or 4% move, it was high probability, so maybe you could have put some decent size behind this. There's never a risk-free trade, but trades like this with this much high probability don't come around that often. All right, we're coming to the end of the show, but I did want to just share one last thing. We are hosting a Web3 event here in Central Florida called Web3 Talk, powered by Web3 CFL and sponsored by InnerSpace Records, the studio that we're shooting this show at right now. Thanks to them, we'll be hosting this show. I, Serpunk, will be hosting with my great friend, Shando, who is an incredible developer and thinker here in the Web3 space. And we're just going to dive deep into all things Web3. We're going to drive a powerful discussion, and we want all you guys to be there and get involved, and we'd love to hear your feedback. So come on out. It's going to be this week, coming up March 16th, Thursday at 7 p.m. here at InnerSpace in Altamont Springs. We'd love to see y'all there. That's all we've got. Thank you for joining me for episode 5 of Web3 Weekly Alpha. We hope you are caught up and that we did the hard work for you. And again, we'll be here next week to do it all again. It's your host, Serpunk, powered by Web3 CFL and InnerSpace. Thank you too, and we are out. Peace.
Blessed by Bundy, blah, blah, blah.
Started off with a bit, now I got coin. I see where y'all going. Been poppin' since Web.